Sabina is one of very few greater than 5 million ounce high-grade undeveloped resources in the Americas and safe jurisdictions. We've recently issued a feasibility. Our technical report was issued in October of this year. It's part of a regional belt. I think the exploration potential, as I will speak to some degree today, will show that this has a very reasonable ability to grow much larger than the ounce count that we've been able to establish thus far. Again, fully funded through the feasibility and permitting. We're going to end the year with about $18 to $19 million in 2015. And I will talk a little bit about the management team and executive. We are a group of mine financiers, mine builders, mine operators. Again, this is something that we have all accomplished before. The Back River Belt was first discovered in the 1980s by Homestake Canada. It was operated by several of the mid-tier and majors in terms of exploration, being Kinross, Arauco, Miramar, Dundee Precious Metals. But it was really only until 2009, when this belt was acquired by Sabina, that exploration success was delivered. Between the 80s and 2009, the resource grew to about 2.2 million ounces. But what we've seen since 2002 is explosive resource growth. In effectively 2 years of discovery, it took another 3 years to drill those deposits off to where they are today. Is we've grown the resource the resource count from 2.2 to over 5 million ounces in measured and indicated, and another just under 2 million ounces in inferred. I think a testament to the quality of the reserves from the feasibility that we've delivered, and there are no peers out there that can state this, is 80% of our reserves in life of mine pits are in the proven category. And the reason for this is it's unusual for companies to drill reserves to proven, which is a measured in a resource category. And what has happened was that with every infill program, they've been actually able to add ounces to the project. And again, it's a testament to the quality and the mineability of this deposit. I think what's very important, particularly in a lower gold price environment, is grade. Grade is probably, I don't think it's overused, grade is king. When you look at us compared to the peers, the only higher grade deposits on this are 100% underground deposits. I spent 15 years of my life as an underground miner through shift boss, mine superintendent, and mine manager. I'm probably more technically savvy when it comes to underground mining than open pit. But what I can say is, particularly in Canada, we have seen very difficult times in attracting qualified people to the underground mining trade. And even though technological improvements have been great, productivity per tons per man shift in Canada has been going down for the last 10 years. Underground costs are certainly much cheaper, and from a risk perspective, certainly less. We are the highest grade undeveloped open pits in the Americas, and I have yet to see a greater than 500,000 ounce open pit elsewhere in the world of higher than 6 gram head grade. In our feasibility we delivered, we're 72% open pit, 28% underground. As I've said before, Back River is part of a district, a belt. It's an 80-kilometer long banded iron formation. We have focused most of our work on 2 areas, one being the George project, and again there's about a little over 2 million ounces of resources, and the Goose project, which is really a center of gravity for our stepstone into production of a little more than 5 million ounces of resources. All of these have areas have prospective targets, and I will talk about some of these exploration targets and some of the recent exploration success that we've been able to deliver to the market. Several of the deposits are very well understood. The best within this belt is what we call Umwelt. Again, you can see the pit outline. From there, it is mined underground beyond. Today, we've drilled this deposit down to 1 kilometer depth. These holes are over $1 million a piece when they were drilled. I came to the company in February of this year. Prior to my involvement, there had been almost $400 million spent on exploration and development of this property. Lama, second best known deposit. Again, both of these that we see at depth, some of the highest grades within these deposits, and it's been drilled to about 400 meters, and we see that from the deposit analogies on these, Musselwhite would probably be the closest analogy of in production banded iron formations in Canada. These deposits typically continue to great depths. Many of the targets we have are still undrilled. This is the Goose project. This is Lama, this is Umwelt, this is Goose Main. This is where the proposed plant site is. We still have over 22 undrilled targets within the Goose property. Within George, again, 2 million ounces of resources, over 30 targets that we still have to follow up. Unfortunately, this isn't a market today that I think many companies are being paid for in exploration success. But what we have been able to do is, for very little dollars, to be able to deliver what we see as potential of additional near-surface exploration, near-surface production, which in effect for us would be very high rate of return, because what it would do is defer some of those higher cost, later stage open pit deposits that we're looking at mining in later years. We made two very important discoveries in 2015. The first was what we call Hivagani, which is down to the south, which is a very interesting discovery in that this is the first time ever that we've actually tested outside of the banded iron formation into the sediments, into the greywackies for gold mineralization in the over 30 years since this district has been explored. If you look at most mature banded iron formations and those that have been operating for decades, is you end up with over half of your resources from outside of that banded iron formation. Those same gold-bearing structures, controlling structures, extend beyond. And I think that Hivagani discovery was enough to get us very encouraged that we could see something in a multiple of the size of where we are today. But Kogoyak, which was discovered by surface mapping and sampling of known structures and geophysical anomalies, was a discovery that's actually closer to our proposed plant site than either the Umwelt or Lama deposits. We know it was never sampled before. It was covered with moss and lichen, and in the tundra that takes decades to cover, and numbers up to well over an ounce per ton. And this banded iron formation is about 8 meters wide at surface and continues for many hundreds of meters on both sides. We've yet to delineate the full extent to it, but certainly we will be testing that target, and it is what we feel is the most important surface discovery made since the 80s on the Back River target. Umwelt and Lama were discovered before those, but those are subcropping deposits. They do not come to surface. We delivered a feasibility in October of this year over previous feasibility that was delivered by the company, which was a larger, higher cost operation. I think we've delivered what the market was anticipating. Was our capital efficiency was increased, and that is your net present value over your capital cost. It's still very significant gold production. We're 250,000 ounces a year in the first 8 years, over 200,000 ounces average annual production life of mine. And what we've done with this is delivered a much simplified mine plan, and that is significantly less execution risk. It is 4 mining areas, 1 underground, and of the 3 surface mining areas, there are 3 pits that are mined sequentially, one at a time. From an environmental consideration, what we've also done is deplete each one of these pits and use them for tailing storage, and certainly it leaves a much smaller footprint on the land. As I stated earlier, 72% open pit, 28% underground. All of the deposits are still open down dip and all but one along strike. What we have been able to do with a smaller footprint and a smaller plant is you can't build a 3,000 ton a day modular plant, but there are certain pieces within that we've been able to create some modularity control rooms, fire control systems, crusher design. And what that does is less risk in terms of on-site delivery, on-site execution risk. And we've also benchmarked this against other northern projects, and we'll talk a little bit about the benchmarking and the results of that later in the presentation. The feasibility was issued in September, the technical report in October. It was done at $1,050 US with an 80-cent exchange. Today, as we all know, we're $1,070 US and about a 75-cent dollar, so it's within about $5 of spot of where we are today in Canadian terms. That has shown a pre-tax rate of return of 28.2%, payback of under 3 years. Again, the highest grade undeveloped open pits in the Americas, and amongst the highest, if not the highest in the world. High recovery, 93%. This is a conventional carbon and pulp cyanization recovery with an 11.8-year mine life, and capital costs of $534 an ounce, all in, including closure of $763 an ounce, which, again, I think is a testament to the grade of this deposit. We are located in Canada's Arctic. This is something that has been done many times before. If we look at the historic Nanisivik mine, the Polaris mine, both coastal base metal mines that not only had to bring supplies in, but base metals out, as does today the Baffinland iron mines. And all the communities, there's about 33,000 people that live in Nunavut. Them and also Agnico's Meadowbank mine, all of these are supplied by seasonal summer sea routes. Again, that's during the ice-free season. And what will happen is from the west is fuel and reagents, blasting media, sorry, everything but fuel. Fuel is being sourced today from Montreal. And again, it's about 3 ships or barges, 3 in total aggregate per year for this mine. From the marine laydown area, which is a barge landing on Bathurst Inlet, it's a 155-kilometer ice road. Again, we look at Diavik, Akati, Gaucho Quay, Lupin, Snap Lake. All of these northern operations rely on winter roads. The Lupin mine, which operated for many years, there was a over 700-kilometer ice road from Yellowknife. So again, something that has been done for many decades in this part of the world successfully. We've also talked a little bit about in our technical report about some of the opportunities, further project optimization. I think the first one is additional ounces and exploration success. I have never seen a property, I think, that is so endowed with gold mineralization over so many areas over such a distance. And I think it's extremely likely that this project will replenish those resources that were mined, particularly in those early years. But there's other optimizations, grind optimizations, and looking at some other aspects that we feel we can add additional value. But in terms of the sensitivity at $1,000 gold and at 80-cent dollar, that is still a very respectable IRR. We're the only feasibility that's out there today that's actually using current spot. Many other feasibilities, and some that we'll use in the benchmarking, as we'll see, are much higher. I think it's important too to talk about gold outside of US dollars. In 2011, gold averaged in Canadian dollars, under $1,600. Today we are 1,340, 1,350 Canadian. So certainly the price performance is much better than it's been in US dollars. Nunavut is one of Canada's better territories. It's our newest territory. It was formed on the basis of settlement of land claims. And what that has done is it's a certainty of tenure. They have an established and very sophisticated environmental process. It is the only jurisdiction that actually has legislated timelines for permitting, and it is also resource development, pro-sustainable development. We have spent a lot of time and effort into making sure that we have engaged the communities and the local Inuit organizations within Nunavut. The KIA, the Kitikmeot Inuit Association, owns the surface rights to our area. We are in negotiations with them with an IIBA. They have a history of working with mining companies, and most recently signed an IIBA with TMAC on the Hope Bay project, which is about 200 kilometers to the north. A bit of an update on our environmental assessment milestones. We actually started informally with data collection back in 2009. Our first project proposal was in 2012, of which ended with our public hearings and a recommendation to go to full EA. We have just delivered on Monday the final environmental impact statement, a very concise document of approximately 15,000 pages and of about $20 million to put together. It is, I might have been a little bit facetious on that, is, the one thing that people like in the mining business is security of title. And if you want security of title in virtually every part of the world, is you also have additional permitting costs and timelines. And that is one of the benefits of working in areas with security of title. It's also one of the detriments in terms of the cost. We expect our final public hearings in the second quarter of 2016, and with a minister's recommendation for the project certificate in the second half of next year. As I've said, there's a legislated timeline. Once we're deemed compliant in our submission, that timeline is not nebulous as it is many other jurisdictions. And once the project is deemed compliant and there's a minister's recommendation for the project certificate, is that effectively is you're granted permission to negotiate your permits. Your permits are no longer binary. You've done the technical review that the project can proceed without mitigable effects on the environment. Benchmarking this project against other peers, I think the one that we're most compared to is Agnico's Meadowbank project. This is a producing gold mine in Nunavut. Their head grade is half of ours, about 3 grams per ton. When you look at their operating costs, remember they're 100% open pit. Ours are open pit and underground. Our cash costs are higher. We're a slightly smaller, well, we're less than half the size of their mine in terms of throughput. There are economies of scale with larger plants. When you look at their cash costs in the last full year that they have issued them, we're certainly on the very comparable, even though the grade of our deposit is twice that of theirs. Again, showing that mines that are like this in the Arctic have been able to operate very profitably. I hope I've been able to convince you that we have a great asset, we're in a great jurisdiction, and from an exploration potential, significant optionality for growth and the cash to be able to deliver in the short term. Is today, and even though our share price is up over 60% year to date, when I started in February, we were the lowest price on an enterprise value per ounce of any of our peers. And I think with the recasting of the feasibility into something that has been embraced by the public markets and showing that we have the path forward for a high-grade producer in the north, we've seen re-ration. But when you look at our real peers, which are the Kaminaks, the Dalradians, the Almadens, which are the unfunded development stage projects, none of those have feasibilities, by the way. They trade at an aggregate of over $20 an ounce in enterprise value. So I think as we move forward, particularly through permitting, we see additional re-rating. Another metric is the price to NAV relative to the peers. They have one in there that's over 1, so we've excluded that from the market weighting, and this was put together by National Bank on November 18th. That peer group, excluding the high, is 0.7 on a price to NAV. We still trade at 0.41. We are TSX listed. We are well covered by the sell side analyst group. 6 analysts that cover us, average target price of about $1 per share. 52-week trading range of 28 to 64. We're trading at about 60 cents today. We have about 40% institutional shareholders. These shareholders have been with us for a long time. This company in 2011, during the last bull market, had a market capitalization with the exact same assets we own today that weren't as advanced as they are today of $1 billion. Today, our market cap of about 115 million, and that's in Canadian terms. Our board, this is a group that have built and operated many mines, particularly in the Americas. Our newest addition is Walter Segsworth. He was the president of Westmin. I actually worked for him as a young engineer early in my career. He was also president of Homestake, which operated at one time the lead mine, which is in a banded iron formation, as is Back River, but was also the lead director of Cumberland when Agnico bought that as what is today their Meadowbank mine. So I think we also have the mine development operations and certainly the capital markets experience to move this project forward. So thank you for giving me the opportunity to present Sabina.